Bitcoin to $189,000. So I rolled my eyes at first, but then I found a $127 trillion clue that changed my mind. Now, I've lost count of how many wild Bitcoin predictions that I've heard. Bitcoin to $500,000. Bitcoin will replace the dollar. You know, the kind of stuff, right? Usually I just smirk and move on. But the other night I stumbled upon a research report, not from some random moon boy on Twitter, but from an actual investment firm, claiming that Bitcoin could hit $189,000. Yeah. 189K. Now I practically laughed out loud. I was like, no way. I thought, here we go again with the hopium. Still, something in me, call it curiosity, call it late night coffee buzz, said, what if this isn't total nonsense? So I decided right then and then that I had to find out what was behind that number. Little did I know that I was about to fall down a rabbit hole that would flip my skepticism on its head. So I pulled up the report, a fresh cup of coffee by my side, fully expecting to debunk this at least in 5 minutes, right? It was by CoinShares, a legit digital asset investment firm, and it promised to explain how $189,000 per Bitcoin might actually make sense without Bitcoin needing to take over the entire world. Bold claim, right? So I figured I would either get a good laugh or learn something. And spoiler, I kind of got a bit of both. First, let me set the scene, right? It's past midnight, I'm in my room quiet, and I'm just staring at this PDF from CoinShares, right? The skeptic in me is strong. I've seen so much crypto hype that my default mode is, yeah, I'll believe it when I see it, but I started reading. And right off the bat, they're talking about something called TAM, Total Addressable Market. Sounds fancy, but it's basically at least that exercise that every startup does. How big could our market be if we captured 100% of it? Now, of course, no one captures 100% of anything, but TAM is at least a way to kind of gauge the absolute ceiling. So let's think of it like this. If the whole world of money and wealth is gigantic pizza, TAM is saying, imagine we got the whole pizza to ourselves. Right? Not going to happen, but it tells you how huge the opportunity is. Now, CoinShares wasn't saying that Bitcoin will eat the entire pizza, thankfully, because that's just crazy. Instead, they were actually picking out a couple of specific slices. They basically asked, what if Bitcoin just takes some small slices of the world's biggest monetary pies? And here is where I almost spit out my coffee, right? The sizes of those pies, according to the report, Global Liquidity, basically all the cash and the money in the bank accounts in the world, what economists call Global M2, is about $127.3 trillion right now. That was trillion with a T. For context, a trillion seconds ago was kind of like 30,000 BC, right? It's a number that is so big that my brain hurts even picturing it. So it's essentially an ocean of money, right? Pi number 1, huge, right? Now, then you have pi number 2, right? Gold. Now, all the gold ever mined on Earth is valued at around $23.9 trillion in total. Another mind-blowingly large number, though much smaller than the money supply. So I pictured a mountain of gold bars, and just that's how much at least $23.9 trillion is. It's pretty wild. And so at this point, I'm thinking, okay, those are giant pies, but Bitcoin isn't going to eat them whole, right? So what's the point here? Well, here's the point, right? The report argues that Bitcoin doesn't actually need to replace cash or gold completely to moon. It just needs a tiny share. And they actually spell it out. Imagine Bitcoin capturing just 2% of the global liquidity pie and 5% of gold's market cap. Now that's it, right? Just 2% and 5%. Little crumbs in the grand scheme of things. it actually, I had to kind of reread that because I thought I had misread it, right? Only 2% of money and 5% of gold. Seriously? Now, I'm a nerd. So I started doing the math myself, scribbling on a notepad like that meme with a conspiracy kind of board, right? The global M2 money, that's around $127 trillion. 2% of that is about $2.5 trillion, right? Still, a crazy amount of money. But remember, just a sliver of the total, right? Now, gold's $23.9 trillion market. 5% of that would be another $1.2 trillion. Add those together, and you get roughly $3.7 trillion. So in this hypothetical scenario, about $3.7 trillion of value would be stored in Bitcoin out of those two markets. Now, how many dollars per Bitcoin does it actually work out to be? Well, let's do some quick math there. $3.7 trillion divided by the supply of Bitcoin. Let's say that's around 19.5 million coins in a couple of years, since not all 21 million coins are mined yet. Drum roll, well, it comes out around that magical number of $189,000 per BTC. Now, my eyes widened here. According to CoinShares, that scenario would mean that Bitcoin's price climbs about 65% from its current levels. And indeed, when this report was published, Bitcoin was around, somewhere between $112,000 and $114,000 and some change, right? A 65% jump from, let's say, 114K lands you at roughly $189,000. I was literally running these numbers twice to just make sure that I didn't have an extra zero somewhere. It all kind of lined up. So I just sat back in my chair and thinking to myself, because, I had to think about it. This implies that Bitcoin's price could almost double. Well, 1.65x to be precise. And it would only require a teeny tiny bite of those massive pies. It doesn't require every company on earth putting Bitcoin in their treasury or everyone using BTC for all their payments. Just a couple of percentage points of existing markets migrating into Bitcoin could actually do it. Now, actually, I discovered that this wasn't CoinShares' first rodeo with rather bold Bitcoin models, right? Back in late 2022, after the FTX collapse, when everyone was super bearish and Bitcoin was at around $17,000, CoinShares put out a report that predicting Bitcoin could actually reach $169,000 by 2025. Now, I bet plenty of people rolled their eyes at that back then. I probably would have too. But fast forward to now, and 2025 is here, Bitcoin's already kind of blasted past 100K and even touched about 123K recently. So 169K or 189K, it isn't some far off fantasy anymore. It's actually within striking distance. So seeing that CoinShares' earlier target wasn't as loony as it once maybe appeared gave me a bit of a weird sense of validation. It's kind of like they had a method to all of the madness all along, and reality has been just catching up. Now, that little history lesson made me trust this new 180K scenario a little bit more, because they've been right, at least in the right ballpark before. By now, it's probably 1 a.m. and I'm pacing around my room, equal parts excited and giddy. I grab my phone, open up my Kraken Pro app, and I check Bitcoin's price again. Still about 114K. And I start picturing it saying 189K. Now, by the way, here's a quick shout out. I usually and actually use Kraken Pro for a lot of my trading. I've got an affiliate link that's in the description if you want to check it out. It helps support the channel. No pressure, of course. If you use it, you don't use it, don't mind. So anyway, I'm refreshing the price on the Kraken Pro app and imagining my stack at $89,000 per coin. Now, if I'm holding, at least if my holdings jump up 65% overnight, like that, of course, I'll probably be waking up to a whole neighborhood of celebratory kind of yelling. And I had this kind of goofy grin on my face just visualizing it. Then the rational voice in my head piped up. Okay, hold on. Is any of this actually realistic? Why on earth would Bitcoin grab 2% of global money or 5% of gold's thunder? Now, those are still enormous amounts, right? And You know what? That's exactly the question to ask. So I needed to see the reasoning. Now, according to CoinShares, Bitcoin is increasingly likely to obtain a high share of the monetary markets as it becomes a more useful form of money. In plain English, as Bitcoin matures, more people will find it handy enough to trust with small parts of their wealth. And looking around, I realized that there are signs of that everywhere. Let's think about the last few years. Bitcoin went from being this fringe internet experiment to something that major companies hold on their balance sheets. Heck, MicroStrategy has basically turned its corporate treasury into a massive Bitcoin stash. Countries like El Salvador have made it legal tender, right? We finally got those US spot Bitcoin ETFs, and even BlackRock and his friends decided to jump on in, which was like the traditional finance world saying, okay, fine, you can put Bitcoin in your retirement account if you want. I even hopped into our free educational Discord server. The link is in the description. At least to kind of toss the scenario to at least a few friends there. And man, did that spark a debate. A few people said only 5% of gold. That's nothing. I think Bitcoin could take 20% of gold's market share in a decade because younger investors would just prefer digital gold. Now, others were a bit more cautious. No way governments and big banks let it kind of get that far without a bit of a fight. And I sat there reading the back and forth at like 2 a.m. energized by the discussion. It kind of struck me that nobody thinks Bitcoin will replace the dollar or gold overnight or outright tomorrow, right? But, you know, it kind of a lot of us kind of agree that it's likely to kind of keep growing its share bit by bit because it offers something unique. And hey, before I get too carried away with all of the optimism, I have to drop a bit of a reality check here. And it might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. It's important that you always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video today is just for entertainment and educational purposes only. Alright, I'm glad that we got that out of the way. It was a necessary disclaimer, check. Now we can get back to the fun stuff. Let's talk about why this 2% of M2 and 5% of gold scenario actually isn't as crazy as it sounds. On the money side, Bitcoin has some pretty killer features that cash and gold don't. Just don't, right? It's kind of capped in supply, 21 million coins ever, that's it. No money printer going brr. It's digital and borderless, right? You can beam it across the world within minutes, sometimes hours, depending on network congestion, right? 24/7, no bank approval needed. It's permissionless and neutral. No governments or CEO can inflate or freeze your Bitcoin if you hold your own keys. Now, these are big deals, right? That's kind of why people sometimes call it Gold 2.0. And so, even if most people, won't put all of their savings in Bitcoin, and honestly, and you probably shouldn't, a lot might put a couple percent in as a hedge or as speculative investment or just out of belief in the technology. And those couple of percent from millions of people and thousands of institutions add up, right? We're already seeing some of this happen, right? I mentioned MicroStrategy, a public company, essentially betting its treasury on BTC. And Tesla, remember, bought $1.5 billion worth of Bitcoin a few years back, right? Dozens of other companies and even small countries have dipped toes in, right? And if that trend continues, even at a slow pace, Bitcoin's share of those giant markets will keep inching upwards. Remember, Bitcoin's market cap today, at $114,000 per coin is around $2 trillion. That's roughly 1 to 2% of global M2 and maybe about 10% of gold's market. So in effect, Bitcoin has already started to do, at least doing what the report has actually envisioned. It's taken a tiny slice of the money supply and a chunk of the gold's role as digital gold. And it did it in just 15 years of existence, through all the growing pains and skepticism. So, projecting that it could reach 2% of global money and 5% of gold in the coming years isn't a huge leap, if you ask me. It's kind of like we're halfway there in some metrics. However, and it's a big however here, nothing in crypto or life goes in a straight line, right? We've got to talk about the risks. Something could derail Bitcoin's march upwards. Absolutely, right? Regulatory crackdowns are the first thing that come to mind. If governments freak out about this much capital flowing into an alternative system, they could pass harsh laws or taxes that slow down the adoption, right? We've seen mixed signals on that front globally. Some places embrace crypto and others just simply ban it. Another thing, right? Maybe the public's interest shifts. Right now, Bitcoin has the first mover advantage and the strongest network effect in crypto. But what if some new technology or even major flaw in Bitcoin emerges, right? Unlikely, but never say never. And some, of course, there's wild volatility, right? And plenty of people can't stomach a 50% drawdown, which happens to Bitcoin every few years or so. That could keep some of the big money on the sidelines even longer. Now, CoinShares themselves note that the model, or their model, is just a framework, not a prophecy. Reality could play out slower than they actually assume. Maybe it takes Bitcoin a decade to grab those shares, or maybe it just never kind of quite gets there. On the flip side, it could play out much faster. You could have a cascade of adoption on big kind of economic events, and suddenly Bitcoin kind of soars past that target. The point is, $189,000 is not a hard prediction with a date. It's an illustration of what could happen if certain adoption metrics are hit. Now, for me, the big takeaway from this whole late night adventure was surprisingly simple. CoinShares even put it quite beautifully. Bitcoin does not need to replace the global monetary system to be profoundly valuable. Capturing a small share of these enormous markets would be more than enough. Now, that line stuck with me. We always kind of hear these extreme arguments like Bitcoin will either go to zero or it will take over everything. The reality can be more nuanced, right? Bitcoin can succeed alongside the existing system, just gradually carving out its place, right? It's not an all or nothing scenario. Even if a few percent of the financial world opting for Bitcoin yields a price that would have seemed unfathomable a few years ago. And by the time that I closed the report and my absurd number of open browser tabs, I felt different. I started the night as a bit of a skeptic, right? Kind of ready to chuckle at the $189,000 projection, but I ended up the night genuinely optimistic about crypto, or at least more appreciative of Bitcoin's potential in a more concrete way. It's kind of like I saw a sneak peek at the possible future where Bitcoin is just another kind of staple in the financial system, like gold, but for the digital age, right? Held by a slice of people, companies, and maybe even central banks. Now, in that future, 189K per coin is not a moonshot dream. It's just a kind of byproduct of gradual adoption. And honestly, I'm excited to watch how this story unfolds. Maybe 189K will just be a pit stop on Bitcoin's journey, or maybe it'll take longer to actually get there. Either way, you can bet that I'm going to be following along every step of the way. So, what did this little adventure and investigation teach me? Well, sometimes the craziest sounding outcomes don't require crazy assumptions. Sometimes they just require a bunch of reasonable things to happen over time. 2% of this market, 5% of that market, and those are the small numbers, but from a gigantic base, and given enough time, will add up. Now, of course, I'm going to keep my eyes open for new data and remain open-minded. Maybe next week another expert will publish a report saying the opposite, that 189K is overblown, and we'll go down another rabbit hole and reassess. That's the fun part of being in this space. It's a never-ending learning adventure. Bitcoin might not make us all billionaires overnight, but step by step, we're making its case, or at least it's making its case to the world.